Hello, folks. Drew Rathgeber here with ProFuturesTrader.com, here with our Steve Wade. Sorry, we've been gone a few weeks. We had some trips that took place, but in saying that, we are back and back in the seat to give you guys some market oversight. Just to let you know, this is not specific trade recommendations for obvious reasons. Everyone's got different risk parameters and so on. So if you're looking for personalized service or personalized touch, in terms of specific trade recommendations, please reach out to Steve or I, and we will be more than happy to help you out. But this is just some of the overview of the markets that we're looking at. So let's go ahead and start with Steve. Steve, how are you doing today?
I'm doing fine, Drew. You know, you step away for a couple of weeks and everything just falls apart, doesn't it?
Well, the last presentation, I have to admit, you were calling the tippy-toppy there on the indexes, and so pretty impressive. You were talking about that on our last presentation at pulling back. We're actually you're short-term bullish and long-term bearish on the markets, and so that was a pretty good call that I saw you put out there.
Yeah, thank you. So what that came from was just the cycle counts, and that's all it was. It wasn't anything magical, and that's why the cycles are important to track. They can keep you in the right side of the trend. And so that's what I was looking at when I made the call in the last video. And anyway, the market has sold off considerably since that time. And you can see that red horizontal line there that says failed daily cycle. That's when we knew the stock market was in trouble. Once it dropped below that line, that was from the previous daily cycle low. That confirmed that we were entering an intermediate cycle low, a larger degree correction. And we've yet to find a bottom for the stock market yet. But we are on day 41 on week 32. So I'm expecting to have a daily cycle low anytime. We're in the timing band for an intermediate cycle low. And at week 32, we're very late in the cycle for an intermediate cycle low, for an intermediate cycle bottom. So I think pretty soon we will be at a low. The next chart I wanted to look at was the chart where I expressed concern about how stretched the stock market was above the 200-day moving average. And you can see then on the next slide, the stock market did peak at that point and has sold off considerably. The next slide, though, shows the same thing closer up. We're still considerably above the 200-day moving average, and I expect that the stock market's probably not going to be making new highs in this next intermediate cycle either. I'm expecting the stock market to continue to go lower or at least go sideways. And I don't think that we're talking about a crash scenario, because we're so late in the cycle. I think that whenever it bottoms, it'll be time for a new daily cycle and a new intermediate cycle. And so I expect things to be firmer, at least for a while.
Yeah, I've noticed a lot of chatter online about kind of a soft recovery. You know, they're going to be or we're getting close to a bottom, like you said, cycle area, and kind of a dead cat bounce scenario, and then we're going to look. You know, I've heard in different places, and they're looking for another sell off from there. So it's going to be kind of choppy from that. You know, and of course, it's all dependent on the tariff situation and the geopolitical. But that's kind of the narrative I've been reading online in the Twitter X space out there. So
yeah, there's a lot of news, a lot of trigger events happening. So anyway, it's just going to be a very volatile time, for the next month or so, probably. So,
yep.
The next chart, we're going to move into gold, and kind of like the stock market, you can see that back in October, gold peaked and was very stretched above the 200-day moving average. And at that point, when you're stretched like that, you don't need to be putting on lots of new positions. You need to be anticipating that we're going to have a decline into probably an intermediate cycle low. So stocks did bottom I think a new intermediate cycle began in December. And so today we're on week 12 of a new intermediate cycle, which that's still early. So the last intermediate cycle was quite long at 28 weeks. This intermediate cycle will probably be more normal, maybe 20 weeks or so, 20 to 24 weeks. But we're only on week 12. So we're probably only halfway through. So gold has time to go a lot higher. There's plenty of time in this cycle for gold to continue going higher. And in the previous video that we did a few weeks ago, I had a target out there of 30.50, and that was just based on the really on the height of that's sort of an ascending triangle, and that would have measured at around 30.50. I really believe gold's probably going to go higher than that. I'm thinking maybe 31, 3,200 would kind of be the targets I'm looking at. And that's just mostly based on how much time there's left in the cycle.
I have to agree with you. And wait for silver. I don't know if
Sorry, Gary.
No worries, but I have to agree with you. I hope you're right in that context. When I know we're all heavily involved in the silver game as well, and we're starting to see a little bit of fireworks in the silver game. But I do know we often peak out going into the spring, summer months at some point in time. So I think there's a little bit more push till we get there.
So the next chart will be silver. This is just the chart that we showed a few weeks ago. Silver had some considerable resistance in the $33 area. And I'd mentioned in that last video, you can see in this chart that silver was just starting to break above that resistance level. And now it's clearly gone well past that now. It's broken any sort of resistance that's there, except for up here around the 3507 area.
Yep.
And I think we'll bump against that probably a week or so until it builds up enough steam to break out above that. And then it's game on after that. I tend to think that we're going up in the $38 to $40 area.
Well, I hope you're right, and I know a lot of us have been waiting a long time. If you look back at this timeline here, a lot of us have been waiting a really long time, and I know there's been a lot of frustration at this 33 area. Everybody holding and wanting to get up to that 38 to 40 area, because the reality is, versus the value of gold and the gold silver ratio, it's just still so undervalued, and I think that's where a lot of the silver bugs, and that's the thing. Silver will run, relatively pretty quick. So you got to be preemptive in the silver game, so you can get stuck chasing.
The last time you checked the gold silver ratio, what did you have there?
90 to 1 is what I kept hearing. It's probably like 91 to 1, or in that area. So
that's kind of what I was thinking. What happens usually, you get in the later part of these intermediate cycles, and this is the third daily cycle that we're going into. So we're starting to get into that late part of the intermediate cycle. You typically see silver outperform gold in that time.
Yeah.
So that's something to keep in mind if you're initiating a trade and you're trying to decide, well, do I want gold or silver? Gold made larger moves earlier on in the cycle, and so maybe it's starting to appear a little more expensive compared to silver. And so silver, what happens is usually silver, people will start jumping in, buying silver later on in the cycle. So it typically outperforms around now. So I would try to steer people towards silver.
Yeah, I have to agree with you. And the liquidity issue is the other big thing. Silver is a much smaller market. So it doesn't take much when you get all that new money and the capital rotation coming in. It doesn't take much to get that market to kind of surprise a lot of people. That's why you just have to exercise a whole lot of patience at times with these markets with silver, because I know a lot of the Silver bug has been frustrated watching gold going to all-time highs. What's going on with silver? It's like, well,
Right.
just patient, be patient, so.
Right. So if you got into silver early, you're probably frustrated. Maybe once this intermediate cycle is finished, we start over in a new intermediate cycle, probably go heavier gold that time. So
Yep.
that'll probably be in the summer sometime, maybe later in the summer even, because I'm anticipating that once this cycle's finished, everything's going to be so stretched above the 200-day moving average that we could see a pretty scary sell-off.
I have to agree. I came from the spot side, over 20 years ago, and that 200-day moving average, it will come back into play. It may take a year, but it will come back into play. So I just, risk management when you get to those levels is just so key, because there will be one day a rug pull. They're kind of brainwashing everybody to get nice and cozy at certain levels, and I just, I can be a little cautious at times. So,
Right. Late in the cycles, you got to control your greed.
Yep.
And you're making so much money, and you just think it's never going to stop. You got to watch that. And I would encourage everybody to start thinking about an exit strategy, how you want to handle this last leg of this run, and to talk to Drew for me, and we can talk about it and try to come up with some sort of strategy that would work for you.
Yeah, because at the end of the day, percentage-wise, it's been on such a great run this last year. I remember a year ago, $23 silver, and I was literally just looking at the price and just kind of screaming at everybody, $23 silver, just based on price alone. There was no real indicators saying this is awfully cheap. And here we are, we're going to make a run for probably 35, 36, 37, 38, 39, 40. And once we do, then it probably will have some type of corrective activity. But who knows? We're kind of in a new paradigm as well. So it's a tough one, with this new U.S. Treasury dollar, and so there's that element to it as well, where it's like, well, maybe we're in different times now, but that's kind of how they get our brains, comfortable. So you just got to be careful.
Hmm. All right, and then the last thing I wanted to show was copper, and in the last video, I'd mentioned that I thought copper would be a good place to be, a good place to put some money to work, and it's starting to break out now above those levels from the previous video, and I expect that we'll see copper up over $5 by the time this cycle ends, and it could even go higher than that, but my next target anyways is $5.
Yep. Well, I hope you're right. We'll see what happens. And again, be on your toes when it gets in these parabolic modes, and the narrative can change, but just be nice to see it get above that 520 area. I have to agree with you.
All right. That's all I got.
All right. So that's all you got. Let me get to my side. I'm not going to be as long as you, but all right, here we go. And I'm going to present my screen. Hold on a second. What am I presenting here? Present something else. Present. Okay, window. No, that's you. Entire screen. I could do this. Actually, I might be bounced between some different things, so I'll leave it like this. All right, so we're going to bring it back to me. So here's some things that I've been looking at, and if you guys were keeping up this last few weeks or before we took a little break, I was just telling you in this area, I kind of had a gut instinct with the U.S. 30-year Treasury that there's going to be a momentum switch, and lo and behold, we are having that momentum switch. I know Trump is really trying to get interest rates down. I know he's really trying to get the housing market moving again. And the only way to do that is to get those interest rates back down. I don't know of too many people that want to pay 7% plus on their loans versus what we had 5 years ago in the 3.5 range. So I know he really wants to get the housing market moving again. In order to do that, got to get these the 30-year Treasury back up. So that's what I've been looking at here, and I was seeing this tighten up back then. And that's why I was kind of telling people to kind of keep an eye on this. And I was kind of sensing it was kind of more of an instinctual kind of thing, just saying, hey, it's really, I know Steve is really into his cycles and timelines and seeing this long sell-off. I'm like, there's got to be a momentum switch at some point in time. And here we go. And we're at the beginning of it, folks. So got this fresh, what they call angel cross with the 15 and 40. And so we're kind of at the beginning of this momentum switch. Let's go and take a look at crude oil. This one's been pretty choppy. What I like to do for me, go off the weekly. And like I said, this market has been very choppy off the weekly. And I look at the longer time frames and I call those kind of my guidance chart. Which direction am I looking for right now? And it's really quite choppy, but we have a little bit lower, or I should say these lows are becoming a little bit higher and higher. So I'm relatively pretty bullish on this right now, but I do not have in this middle range kind of a specific trade I would jump on. Maybe if I was fishing around, I look for that 68 area. And then on the top range, trying to get short 78, but look out for those breakouts above that. Let's go and take a look at the, actually, we just rolled off of this. We're no longer in March, but we'll use this one for today because I'll kind of follow one and the same. We've had a huge sell-off, just like Steve mentioned earlier. I would like to see a dead cat bounce, get back. And this is on March. I know we've rolled over to the June contract, but 2-0, let's see here, about the 200 range on the NQ. Be nice to see just a soft recovery from there. And I know that's what a lot of people are talking about online as well. I know Steve's talked about gold. I love gold. As you can see, we did have some great buying areas here in the past. We can see we had that great angel cross, but I have to agree with Steve that we are going into that territory of hoping to get to that 31, 32, 3,300 on gold. But risk management as we get in this late in the stage is paramount. You got to be really on your toes because they will eventually, I'm not saying now, but eventually do a rug pull. I'm thinking more in late spring or summertime or late summer. Let's take a look at the euro. We all talked about the US dollar coming off. We do have a switch, and this is on the weekly. So this is a very high time frame. Let's go and dig down a little bit lower. All right. So very short term, probably see a little bit of a pullback. But in saying that, so this is actually very bullish for the metals. You can see this got a fresh cross to the upside on the euro. So that means the USD would probably be coming down further and further. And I know Trump wants that as well. So we're seeing the euro pick up some steam here. I would definitely keep an eye on this, but I wouldn't. There's no specific trade unless it pulls back to the 107, 106 and a half area is what I'm looking at right now on the euro. But that's all I've kind of have. I know I'm a little bit short and sweet and simpler, but that's all I have for this week. Steve, do you have any more comments?
No, I like all your ideas and what you had to say. That especially on the currency. I was so focused on the metals, I kind of ignored what was going on with the euro there, and so I missed it. I wish I'd put some money to work on the euro, but it's coming out of a 3-year cycle low.
Yeah,
and so the euro should have some legs to it, and if you can come up with a level where you feel comfortable taking an entry on that, I really like the euro.
Yeah, just kind of like the U.S. Treasury, the 30-year. When I saw this is on the weekly, so really high time frame. But when I said instinctually, I sense a change coming here, and we're kind of going through. It's going to take another couple of weeks to kind of confirm. But with all the tariff situation and everything that's going on, we could be seeing a change here, and that would mean a significantly weaker U.S. dollar based on that. So you can see we're moving averages are starting to tighten up. So we'll see what happens there.
Trump is wanting to bring manufacturing back to the United States, and having the dollar come down in value considerably is crucial for his plan to do that.
Yeah, that's what I've been kind of keeping my eyes on. That's why with the gold, I can be a little bit pessimist when I see it make this big of runs. But at the same time, when I start looking at the dollar and some of the other bullish factors, it's like, whoa, gold and silver could still be at the kind of, not gonna say early stages, but it could be in for a pretty decent run that might overextend itself quite a bit based on kind of the currency action that we have. So,
Right.
But that's it for week. Anything else, Steve, that you want to go over?
No, I think you covered it.
Okay. Well, I appreciate you guys all coming in. If you have any questions, please reach out to Steve or myself, and we'll be more than happy to discuss any specific trades with us. Other than that, I hope you guys all have a great trading day. Take care. Bye.